Hi, welcome to the Market Alert for Wednesday, the 22nd of July 2020. So yesterday the main headline is the precious metals, gold soars, euro roars as dollar dumps and the stocks slump. And other news as well regarding the metals. I'm going to look at this after we've looked at the main part of the Dow and the DAX. But gold joins silver in surge higher as Asian markets open. This is something that I've spoken about a lot in the 3 videos that I did, or 4 videos, End of the Financial Road, where we detail why it was important to hedge against what's coming down the line with precious metals as the only way of hedging against the total collapse that is en route, thanks to the central bankers, because of their putting out the fire with gasoline, as this meme depicts here, because that's precisely what they're doing. They're creating an unmitigated disaster with the amount of printing, and they have been for the last goodness knows how many years. I've talked about it many times before, and this is why you're seeing the move to the precious metals by huge volumes, and it's only just started. You're going to see price levels that you have never seen before. As it says here, silver's current run follows on the heels of its best quarter since 2010, and 2010 was because they were printing money. But this time it is different. There's no doubts about that. But we'll get into that before we finish the market alert. And again, it's quite simple why it's doing what it's doing is because Fed policy simplified, lower, longer, and ZERP until something and this is the important bit, it should be when everything breaks. The markets are a farce, the dollar is garbage, and it's a toxic depopulationary, deflationary, depressionary world. It certainly is. And there's so many people walking around in cloud cuckoo, full of absolute delusion and cognitive dissonance, thinking that everything is going to change. Once they found a vaccination, we go back to normal, but nothing could be further from the truth. The financial system is broken, but more on that in the second part. Now, yesterday, again, as I've warned over the last few days, the DAX has been really quiet. And yesterday we saw the market move lower, find the buying coming into the market, and then slowly crawling its way back up, apart from one red bar there that we saw following the European deal. Again, 1.8, I think it worked out in the end when I saw some other details, at 1.8 trillion euros over the next 3 years. Again, printing garbage, printing fresh air for future generations to pay back. So anyway, the market used this, and that's how it was. There were no signals in the morning. So I thought, okay, right, we need to find something to trade. I can't sit around here watching paint dry. And in the afternoon, I decided I would actually work on the Dow, go back and have a look. I created some settings, what I thought would be produce some signals in the 2-minute chart. You see there, I'm using the 2-minute. And I ignored the DAX in the afternoon and spent my time focusing on the Dow, which I'm just going to fast forward through. These settings are not definitive by any means. It's just that we've got a bit more volatility, some nice volatility in the Dow in the afternoon. So again, I'm just going to fast forward so you can see. That's the 1-minute chart. So I was just having a look to see how the signals were faring in this, and if I could spot where the buying was coming in. So again, I'll go back to the 2-minute chart in a moment. This is part of the research that I was doing. So then we had the market moving higher with a potential buy signal. And again, I'm just going to fast forward through these so that you can see how well they worked yesterday. You've got all the usual thing. Doesn't matter whether it's 1 minute, whether it's the Dow, it doesn't make any difference. The principles are exactly the same. So we've driven through the 200 MA here. We've got some buying. We have a bit of selling here as well, but we hold above the 200 MA. We've got the R2 in the way. We've got the scalp, which I changed to 20 as well. And then prices go through the scalp, and let's have a look. And then the BRN there, and then the R2, and then eventually just decide to come out. I'm switching between the 1 and 2 minute chart here, which is why it looks a bit odd. Again, looking for clues to see what the market was doing. Price is still holding above the 5-bar moving average there, and then looking at it in more detail, we trade to the BRN through the R2, and that's where the market stopped there. Then went sideways. We've got some potential weakness. I'd say I'm just going to fast forward through this just so you can see how well the signals were. The irony in all of this is that the market started to trade sideways in the 2 minute chart, where I thought we would actually get some nice volatility. I just couldn't believe it. So there we had a short, and eventually the market breaks, goes down to the 200 MA, which we see in the DAX as well. Well, any market, obviously, but what I mean is that when we get down to the 200 and the BRNs, the market starts to trade sideways, which isn't unusual. There's 46 points on the table there. And you'll see prices start to find support, a bit of an increase in volume there as it's retested at the BRN. And then the market moves back to the upside in just a moment, which you'll see there. So we get another buy signal, the market's filled. And I'm having a look at the daily chart just to see where things are. And then prices show potential weakness. And just give it a bit more, see if it'll get to the BRN. And you can see how it's struggling at the BRN there. And then prices again come back. We have a potential sell signal, which is then superseded by a buy signal, and this time the market drives through where there was a problem before. So there was 4 signals in the afternoon. I'm just going to fast forward through this, and I'm going to have another go this afternoon on this and monitor it just to see how well it works. But these settings so far seem to be okay. So I mean, please, feel free to have a look at them. But as I've said at the outset here, these are not cast in stone. They are something that I have found at the moment that seem to be working. So wherever they are, I did put them in the video, but I can't find them. We need to go back a bit more. I think somewhere around about here. Let's just have a look. There we go. Yeah, so that's the settings that I'm playing with at the moment. Like I say, not cast in stone. So let's have a look at, go back to the DAX, and in the afternoon there was activity. You can't make this up. So it started out really quiet, and that's why I switched to the Dow. Then we had a potential sell signal, which would have been absolutely perfect, but unfortunately the market came back to the BRN and then sent the market lower. Of course, it would make sense in this situation, given that we've got the resistance at the BRN there, where the market was banging its head to have moved the stop higher. But this one is set at 10% above the bar. Nothing to stop you moving it if you wish to, as long as you're not breaching the 1% risk. And then obviously the market did play ball, but unfortunately stopped out on that one. But profits picked up in the Dow. So daily chart, where are we in the bigger picture? Well, we can see we've got some potential weakness in the DAX as the market's hit the 89, and there's weakness overnight, but the market really quiet overnight, as we can see here. So let's just go back to the 2 minute and go forward, and you can see there the market's sort of sideways to higher. There's a bit of movement now as we head into the pre-market session, which is a bit like yesterday when I mentioned that the market would move higher in the futures market given the news. I'm just going to wind this back to that point. That's the night before. Let me just bring it back. There we go. So yeah, as I said in yesterday's market alert, in the pre-kickoff in the futures market, the DAX moving up in response to the European deal that was actually done. But overnight, for today or last night, we can see early hours the market's gone through the DP and the 200 bar moving average and currently is sideways to lower. So like I say, there's a weakness there in the daily chart, so I'm keeping an eye on this at the moment. I'm just going to remove these two areas here, and also from this low to this high, draw in these fib retracements as well, just because there's a good chance the market could trade to these areas as well. So let me just move these around a bit and have a look in a bit more detail. The bigger picture is really important. You can see there that we're the 89% fib. So these are the areas that you want to keep a note of if prices do move lower. Okay, so that's it for the markets. News-wise, we've just got crude oil inventories out at 3:30 p.m, so the market's going to have to make up its own direction. And with regards to the move in silver, we've been monitoring this for a long time. If you come to the main page for the YouTube videos, you can either do a search in here and of the financial road. I can't actually type in it because I've got a keyboard shortcut for the I'll tell you what I'll do, make it easy for you. I'll include the 3 links to the videos. If you've not seen the end of the financial road videos where I discuss about the coming financial collapse, and I've done for many years because of the devaluation of all currencies, the explosion in debt, particularly this year, then what I'll do is, like I say, I'll include the links in the emails. But if not, you can come into the website and click on videos, so they're all selected, and then do a search and just type in end of the financial road, and you will find the videos there to view, where we talk about precious metals and all the rest of it. And that's of course is the main thing for yesterday. You can see there that prices have moved up significantly, and I've shown you before that I've been accumulating positions in this. I own the physical metals, I own ETFs. It's a no-brainer because it was so undervalued compared to the gold-silver ratio as well, which I discuss inside of part 3. It was just a no-brainer. You can see that $50 up here for the price of silver, and the moment we're only at 22, and I was down here buying at the $13 when they shook it out in March when the COVID hit. But now we've broken these areas here. I'm looking forward to the ride to $50 per ounce and beyond. It's going way beyond the $50. So and all I'll do is as it pulls back, like today, we can see there's overnight prices again have shot up significantly. They're pulling back a bit at the moment, and if it does pull back, I don't care if it comes back to this level. I will just buy more, ready for when it moves back to the upside. It's a long play. It's not a short-term trade. It's one that I will be playing for a very long time, which is why I just keep adding positions. So yeah, there you go. That's the silver side of things as well. So hopefully the volatility will pick up in the DAX and in the Dow. Some nice trades coming in the Dow at the moment as well. I'm also going to start adding some currencies in as well. Okay, that's it for this one. If there's anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.